All right. Hello, everyone, and welcome to this Barnaby live stream with a panel discussion on potential challenges to becoming a corporate PPA provider for renewable energy. My name is Christian Baumgart. I'm with Barnaby's Project Finance Group, and I will be your moderator today. Sorry for that. So we are very happy that you took your time to join us on this live stream. And I want to take like 1 minute to go through some housekeeping rules, also giving some more people the chance to join and to dial in. So as already said, the main part of today's event will be a panel discussion on PPAs. And we have planned for a 15 to 20 minute Q&A session towards the end. So please feel free at any point in time during our discussion to already submit your questions. When you're not in full screen mode, you will see a panel on the right side of your screen. This panel will ask you for your name and your email address. And then it has the nice German word Frage on top of the last box. And that's where you would put in your question. If you want to direct your question to a specific panelist, please feel free to mention that in your question, and then we will try to pick it up in the end and bring the discussion towards this question with the panelists. Also, if possible, of course, we would very much appreciate your feedback at the end of this event. Please also leave us a note and say what you like, what you didn't like. We certainly plan to do something like that again. So please feel free to give us your feedback. Not necessarily on my moderating skills, but on the format itself. So we're always open for suggestions. The focus of today's event will be a discussion. We are not showing too many slides, so it's mainly a listening in event. All right, so let's get right to it. The topic of corporate PPAs. So I myself have been involved in financing of renewable energy for the last 14 years, and my renewable energy career basically evolved with the tariff regimes that were implemented all over Europe back then. So during the time, the analysis of a renewable energy project, of a renewable energy finance, was certainly only focused on, was relatively straightforward. It was basically a resource risk: is the wind blowing, is the sun shining, mainly a technology risk, to some extent a construction risk. And then it was only about country specifics on a certain tariff. What is special about the German EG, about tariffs in Italy, Spain, UK, France, you name it. But you didn't have to think about off-taker risk. You didn't have to think about power purchase agreements. They basically were none. It was all tariff driven. So that's how a lot of renewable energy evolved in Europe back then. I also had a chance to work in our New York office for a couple of years. And in the US market, this system was not promoted by tariffs, but by tax incentives. So there were no tariffs that you could rely on. You really had to take a look at off-taker risk. So that was a very different scenario. And all of a sudden, I also had to re-educate myself about PPAs, and a power purchase agreement now was a very crucial element of any financing structure, if not the most crucial element. So being back in Europe, this PPA topic has been a very, very hot topic over the last 2 years, for sure. And we as Barnaby thought we can bring some value into the discussion and bring some experts together to really also look at certain aspects of power purchase agreements. It's a very evolving topic, and we believe more and more corporates are engaging in it. And we are excited about the process. And with this discussion today, hope that we can add some value to the discussion. So on this panel, we believe we have found certain experts in the PPA market, on PPAs itself. And by that, I will shortly be joined by Dr. Mercy Lapordena. She works for Resource. Mercy is a senior policy advisor at Solar Power Europe, the European Solar Industry Association, and she oversees the activities of the Resource platform, the European Alliance of Corporate Buyers and Sellers of Renewable Electricity. We will also be joined by Jens Holstein from Pexapark. Jens is the head of PPA transactions at Pexapark. He joined the company in 2018 and has since worked on a variety of PPA negotiations across the Nordics, Spain, and Italy. Prior to joining the firm, Jens spent 10 years at export trading, with the last 3 years in origination. He has structured and managed renewable energy offtake agreements, built up the direct marketing business of Axpo in Switzerland, and closed supply agreements with large industrial customers across Europe. And last but not least, we are very happy that Anurag Yalamanchili from Uniper joined us as well today. Anurag has been working in energy management, trading, and origination for the past 5 years, and most recently has been active in securing renewable energy PPAs for Uniper as a utility across Spain, Italy, Germany, the Netherlands, Sweden, and Norway. He is part of a team at Uniper that has successfully secured PPAs for over 1 gigawatt of wind and solar assets in these markets. So here we go. Perfect. That worked out all right. Hey, welcome, guys.
Thank you.
So,
thanks a lot.
Let's start. So, to start off, I would like to set the scene a little bit, and Mercy was willing to help me with that. So, basically, talking about the current state of renewable and corporate PPAs in Europe. Mercy.
Absolutely. Thank you very much, Christian, for the introduction. And yeah, as mentioned, I am the Senior Policy Advisor for Solar Power Europe, and I also oversee the activities of the resource platform, which is the alliance of corporate buyers and sellers of renewable electricity. So with this more European view and also like global view, we would like to introduce you how the corporate PPA market looks like in the US and also the EMEA region and also the APEC region. So if you could please show us the first slide. Awesome, thank you. So all of you can see here some numbers for the global corporate renewable PPA market. And you may see that the three markets, in America, EMEA, and APAC, they are picking up, they are increasing, but of course there's an obvious difference between what is happening in the US and what is happening in the rest of the world. And as Christian has mentioned before, that is because the US market started much before than the European market, because it was mainly based on tax incentives. So here in Europe, as you know, we received financing support from the states, so feed-in tariffs, etc. So let's say that there was no such a need, absolutely need, to enter into a PPA. But now these financing schemes, they are fading away, they are disappearing. So there are other incentives to look into this possibility. And as you can see here, the US market, it takes more than 70% of the global share. And in cumulative terms, for Europe alone, we have not even 10 gigawatts. We have about 9.4 gigawatts of cumulative corporate PPAs. But that will change. So you can see that here says like a lag difference between, I would say, 4 or 5 years more or less between what's happening in the US and what's happening in Europe. So we are confident that from now on, more and more corporates will engage in PPA deals and that the European market will catch up. So in the next slide, we can see that what's the difference in the number of deals. So in the left side, you can see the annual PPA deals that are being closed, and in the right side, the cumulative numbers. And you can see that actually there are more and more countries that are engaging in this type of deals, also because of the regulatory environment allows that. So markets are opening up, so not only makes business sense to close these type of deals, but also now more and more countries, they favor these type of deals in their countries. So you can see like a winning record 2019 year, that there has been some amazing deals closed, mainly in Spain by large corporates, and that means solar for Spain. But also we can see some deals being closed in 2020. This is not, of course, final numbers, so this is only the beginning of the year. But we can discuss later how the COVID situation affected this number of deals. And in the next slide, we can see what's the share of the cumulative contracted PPA capacity here in Europe. And you can see that there are some Nordics that they are still like taking the highest shares, that mainly that's hydro power deals. But also we have some other countries that are little by little increasing, like as mentioned, Spain, or also the Netherlands, or even Poland, that little by little they are catching up. So we will see this pie chart really like changing in the years to come. Next slide, please. And finally, I would like to provide you like a breakdown by sectors. So you can see how each individual sectors like behaves in terms of closing the deals. And you can see that the most ambitious ones, of the one that have seen more opportunity, is the heavy industry sector. And that's mainly because they consume huge amounts of electricity, and they see an opportunity here in these deals to actually save money. We will see later what are the different options for your company to engage in this type of deals. But you can see that mainly the heavy industry sector and also ICT. So by ICT, we mean Google, we mean Microsoft, Amazon, etc. That they, with the data centers, also consume lots of electricity, and they have seen in these deals a huge opportunity ahead. And yep, with that being said, by setting the scene, I would like to mention that yes, so we see that the European market is catching up, but of course there are some challenges ahead. And these challenges that we see that we need to overcome, they go from, for instance, the lack of credit worthiness of some of off-takers. So, which is that of course required by the supplier to secure financing. And also maybe the limited willingness and incentives for off-takers to take on the long-term forward market risks. We will see later. And also the appearance of derivative contracts, that are the ones, the so-called virtual PPAs, that we also will discuss them later on. They raise like an additional complexity to the accounting of these instruments. So because of all these, say, challenges that we need to overcome, and others, much more, we set the resource platform so that we do provide some solutions, some to increase the awareness, mostly for these companies that they are entering the market, that they feel that they are new to the market and they need this, say, initial information to know how to navigate the market with confidence. So if you want to log in into our website, you can do it during this webinar or later on, and just surf around to see what's going on. And if there's any doubt whatsoever, just contact me later. So with that being said, I would like to pass the word to the next speaker. And yep, I'm sure that we will have like very interesting conversations about more like, say, technical details about how to actually how to close these deals, which are the different options, right?
Yeah, absolutely. So thanks for that, Merci. That was very helpful. So that was kind of setting the scene on the PPA market. And we also thought about it makes sense to, let's say, cover the bases a little bit on the differentiate main types of PPAs. So I think we could spend another hour on talking about all these different types of PPAs and go into all the details. So we try to not go too deep into these differentiations, and I'm mainly talking about the main PPAs. And I would like Anurag to maybe give us a little overview on the main types of PPAs that you would typically talk about.
Thank you, Christian. The audience, there are quite a lot of types of PPAs that can be transacted in terms of renewable offtakes. And it's important to note that there are four major categories of renewable offtakes we need to consider. The major ones, I think some of the recent, in the previous slide, as Mercer had shown, a major part of the transactions that were done in the last 2 to 3 years were either what you call as physical power purchase agreements or virtual or financial power purchase agreements. And in addition to these, you have renewable offtakes such as green certificate offtakes and a direct connection power purchase agreement. Now, for major classification, I'd just like to briefly explain what's the key factors that determine what constitutes a physical or a virtual PPA, as these are the major ones that have been concluded in the past few years. Now, a physical power purchase agreement is something that is transacted between an off-taker, be it a corporate, be it a utility, and or be it a developer who's supplying the electricity, and this is done via the transmission network. Essentially, the power is fed into the transmission network and then off-taken from the network. And an unknown here is the transmission network operator. Effectively, you have an agreement for long term between each other, essentially the supplier and the off-taker. And on a daily basis, you have to forecast what you're expected to consume and supply on the day-ahead platform, the day-ahead market. And there is a need for balancing your actual supply and demand against what you're forecasting. That's how a physical PPA would work, operationally speaking. Now, in contrast to a physical PPA, a virtual PPA or a financial PPA, as we call it, is something that is concluded completely between the off-taker and the supplier without the involvement of any operational stakeholders. Now, it is similar to a contract for difference or a financial instrument where a certainty of prices is agreed upon, and the off-taker and the supplier are comfortable with a fixed price over a long period of time, and they would certainly purchase the electricity as they usually would and sell the electricity as they usually would in the electricity market. However, settle the difference between the fixed price and the price they actually were able to capture in the electricity market. And that's the important aspect to note about a virtual PPA. Now, both these types have various contractual mechanisms, bespoke and EFET, or an industry-specific physical power purchase agreement that is being defined on the physical side. A virtual PPA could be done also by an international standard derivatives agreement, or what you call as an ISDA, which is also applicable to various other financial instruments not associated with commodities. Aside from the physical and virtual PPAs, the most proven and the most undisputable form of green offtake is the on-site or a co-located direct connected PPA, where also you have two parties, essentially the off-taker and the supplier, and there's no involvement of a grid, but there is a grid connection, or there is a cable connection. Essentially, treat the solar farm as the plug point, and the yourself or your computer as the demand location. Essentially, they're connected via a cable, and that's how an on-site PPA is set up. That involves certain additional capital costs to set it up, and it's quite inflexible and it's quite location restricted. Therefore, we don't see too many of these in the market.
The truest form of a physical PPA, right? So it's basically the part, the generator next to the end user.
Sorry, could you repeat that? I'm sorry about that.
No, I mean, I feel like that's like kind of the truest form of a physical PPA, right? It's the generator right next to the end user, right? So it's basically the power plant is next to the usage.
Exactly. The undisputed form of additionality. There's this concept that we known as is called additionality in the green offtake industry, where the offtaker certainly is existing to, or essentially the PPA is existing to also help bring onto the grid a new plant, a solar or wind park that would not have been there without the off-taker. And that is something that is undisputable with an on-site PPA and also with a physical or virtual PPA. Now, there's an ambiguous element with a GO offtake, as we call it, and that's the one that is least considered for additionality. Essentially, you in this form, you just purchase electricity from the market and then purchase tickets or green credentials that that would essentially claim that you have purchased green electricity. However, in this agreement, you cannot state or you cannot claim that a solar or wind park could have existed without your help or with your help. Therefore, it's the least form of additionality, or a GO PPA, is something we see less and less these days, and also perhaps least endorsed by some of our other esteemed panelists.
Yeah, that's maybe also a good point to bring Jens into this. So, Jens, what do you feel is these days the main driver behind these corporate PPAs? So, what is the main motivation to close a PPA? Is it purely a marketing tool? Is it the regulatory pressure, economic reasons? So, what do you feel is the most driver these days?
I think we can build on the beginning what Resource was providing as a stage. I think we saw there two trends of companies. I think the first row was maybe coming over from the US, and we saw the big tech companies trying to copy the model they had in the US here in Europe. And I think here the clear driver is marketing. For Google and Amazon, power prices play a role, but in the end, it's the marketing behind that makes them sign these agreements and move in these directions. And the actual costs behind is of interest, and they want to purchase at low power price levels, but it's not the main driver. If you look to the balance sheet of Amazon, if they pay €2 more or less, we won't see it. I think then there is a second group of companies, maybe the second wave. I think this is the heavy industry on the slides, and for them it was really a cost argument. They are used to the long-term nature of power production. They are used to long-term contracts. They had signed 15, 20-year agreements as well. I think it was starting in the Nordic countries. Where in Norway, the big aluminium producers needed to renew their long-term contracts, and PPA was the new and even cheaper alternative compared to good old Statkraft contracts. So they went for renewable PPAs, which was the second wave we saw on the renewable market. And I think now we are seeing the beginning of a third wave, which is basically all the others, and maybe mostly the companies who see a higher marketing value. So we are in the B2C business. Consumer goods, I think, was on the list, but potentially as well the transportation sector. I think we see quite a few of the railway companies and infrastructure companies moving in this direction. I would add telecom to this. They have a very stable business. They can afford long-term contracts, and they see a value on the marketing side towards the customer in getting engaged in these contracts. That's maybe now the third wave, which is starting and which hopefully is growing, because if you want to finance the growth of renewables in Europe, we need more corporate off-takers. This cannot only be done by the Unipers and the like, simply because they can only do a limited amount of these deals, and there is a huge amount of new plants to be financed. Currently, we still see a lot of deals on the utility side, but I think it's moving towards the corporates, and we need this move.
So that's exactly to the point. So what do we believe, or you guys, what do you think are the main obstacles and challenges to really engage as a corporate in PPAs? Like, For example, I think for some, the long-term view could be a challenge, like the associated risk with fluctuating, decreasing power supply that on the generator. There are days where it's basically no wind blowing. So how do these companies manage these long-term risks? Or is that, what other obstacles could be there? Like, like also the long-term power view. So what does the company need to do in order to find a position on the long-term risk? So Jens, maybe
maybe I start and then the others could jump in. I could imagine that I think most industrials currently purchase power more on a shorter term duration. So they have 1 to 2, maybe 3-year contracts, some 5-year contracts. That's what they are used to. So it's really a cultural change, moving into this long-term nature. There is no benchmarks, what is a fair price, usually in the company. And it's treated as just one additional supply contract. I think if you move into the PPA area, it becomes more of a strategic components. The contracts went really large. I think PPA contracts can easily be a 3-digit million contract that requires really management attention. And I think that's one of the main obstacles. But maybe others can jump in.
So on the technical side, for example, do you need a lot of technical expertise to really engage in these PPAs? Do you need to build up your own technical team to really set a group of people aside that only cover this topic? Or is that knowledge available in the market? Can you basically buy that in the market? Do you really need to set it up internally? I mean, I would be thinking, okay, if I go to the corporate PPA sector, do I really have to get new people in to really only cover this topic? Anurag, maybe that's something you can say something to.
Absolutely, Christian. I would certainly. I think I completely agree with yourself and also with Jens that there is a lot of effort that would be needed to also conclude a purchase agreement and also operationally monitor that, particularly depending on what sort of offtake are you working with. Is it a base load offtake, or is it something that you're considering a pay-as-produced offtake from a solar or wind park, where the exact generation of the wind park is or a solar park is consumed by you? And firstly, the longer term aspect of the PPA, it's very important to understand, as Jens rightly stated, it could go up to a 3-digit million contract. You need to develop a fundamental view of how the electricity market would go forward over the next 10 to 15 years. That potentially would involve a team of people modeling the demand and supply balances of electricity and consumption over the next 15 to 20 years, potentially also how the rest of the commodity prices develop, how they feed into the power price complex, essentially. And there's certainly a lot of operational effort needed to build into that firstly on the investment side. Now, speaking about more in delivery, essentially when we speak about a solar PPA or a pay-as-produced PPA from a wind park, you need to regularly be forecasting or anticipating what can a wind park produce tomorrow or the day after. Now, that is something you don't have to be concerned about with conventional hydroelectric plants, where there is some form of water storage and you can dispatch it as you like. But that's not what you can expect from a solar or a wind park. You need to regularly monitor these assets to be able to time your own consumption or match or synchronize your own consumption with this electricity on one end. Furthermore, wind and solar parks in Europe, most of these have been project financed. Essentially, when these project financed special purpose vehicles are owning the wind parks, they also have a different form of credit treatment that also needs to be closely monitored and closely checked upon, as they do not have major utilities or major suppliers backing them in the end. So because of this individual nature, that also requires some heightened attention from a credit perspective. But I defer to some of our other experts also on any further aspects that needs to be considered.
Absolutely. I mean, that's definitely a major topic. Also, like from a credit perspective, credit worthiness, of course, in any financing is a crucial part to these PPAs. But even if I'm a small company, I should be able to engage in PPAs, right? So, but that's something maybe that needs to be considered, that banks typically will ask on the project finance level, on the project level, ask for certain credit enhancements, probably from supplier, depending on the credit worthiness. So that's also something that's maybe an obstacle for maybe smaller companies that maybe are also, the balance sheet is maybe not as strong and their balance sheet maybe not as big. So how can these companies overcome these situations? Like, I don't know, they have to provide an LC, a parent company guarantee towards the generator, but that's maybe freezing up their guarantee lines for many years. So I think that how can they overcome such an obstacle?
I think this is not an easy obstacle to overcome, as the long-term nature of these contracts leads to these credit risks, and they are in part that is embedded in a PPA. So either we see the first PPAs being signed by very strong companies who have the necessary ratings to sign these PPAs based on PCGs, and don't need to go back to bank LCs, which are quite costly then as well. And I think we see one interesting scheme in the Nordics that could be something maybe we could push on a more European level, which is the GEEK scheme, and it's basically helps to ensure this credit risk. It's an insurance scheme to ensure the credit risk of the off-taker. And it's quite successful. It enables quite a lot of PPA in Norway, and that's maybe also one reason why we saw the Nordic countries being so big in the first years on the European scale, because there was one way to secure this credit risk on the off-taker by an insurance scheme of the Norwegian state. If we would have something on the European level from EIB, really this could maybe help to overcome this hurdle for additional PPAs.
Yeah, and actually, the EIB is working on designing a dedicated financial instrument for corporate PPAs. So they are working on that. I cannot say more.
Yeah, I keep saying this on each panel where I am, because I think this could be a real big enabler to push the market.
Yes, I believe so. It is.
So that would be going also into one of the questions that I had, like what incentives are there maybe structured on a European level to really push for these PPAs? So is there something coming, or is there something in development, or am I missing something? Like Mercy, for example,
From the European level, actually what you need from the European level is just to remove mainly the regulatory barriers that exist at country level. So for that, you can monitor what is happening at all the member states by accessing our web. We have a directory that shows in which countries they have already, which type of deals they have been built, in which countries, because of their regulation, allows to close other certain type of deals. So by going there to this directory, you actually can track what's going on in Spain, what's going on in France, in Poland, etc., etc. So you can, I wouldn't say easily decide, but actually would help you decide a little bit and to know what's the national situation there. And from there, just decide whether that's an option for you or it's not, because it's true that in some countries they have certain regulatory barriers that are not making the life easier for corporates or others to build more solar plants, for instance. And that also applies to certain charges, surcharges, taxes, etc., etc. So there's also these, say, I wouldn't say problems, but the other things that we need to consider that exist at country level, and they vary a lot from country to country. So for that, you have this option, this directory that may help you navigate this European market. And also there are other options to help you reduce these transaction costs. By that I mean the work that has been done by the European Federation of Energy Traders. It has been working for some years now in developing a template model for corporate PPAs. And this is a model that it's aimed to facilitate this negotiation process, and for that also to reduce these transaction costs. And it can work like in a cross-country level. So it works, it's suited for multiple jurisdictions. It works for different types of PPA models. Also, as said, works across countries, and it has been translated and adapted to certain, say, national legislations, meaning it has been translated to Italian and adapted to the Italian regulatory framework, has been translated into Spanish and adapted to the Spanish regulatory framework, and also gone the same for Poland, also adapted to the Polish regulatory framework. And that is a tool that is available out there, and it's free. That's worth noting. So it's free, you can check it out, it's open source, and also it's under regular reviews, and also there has been confirmed by several financial institutions the bankability of this agreement. So also you can say that it's trustworthiness. And because it's free, you can check it out. And if it doesn't work, then you can look for other options. But at least it's worth noting that it's out there and exists.
So that was also one of the points and questions that came up. So is there, like you're saying, that this is an approach in order to kind of standardize the contractual framework around these PPAs? Because these days there's no standard on these PPAs, right? So also as a corporate, I'm faced with a multiple variety of PPAs, pay-as-produce, base load, and virtual physical. And so this would be like a move in order to standardize these contracts. And also, how do I, as a corporate, can identify a good PPA? So how do I know that this PPA is good for me and for my company? So that would be, to me, a main obstacle. So I guess, are we at a point where these PPAs are also economically really viable for these companies, or is it really still more as a marketing tool?
I would say where do we see the most PPAs? I think that's in markets where the long-term production cost of renewables are below the market prices. These are markets where we see a boom of PPAs. We see this in Spain. We see this on wind in the Nordics. We start to see this as well in Germany on solar, because you can produce below the price levels we see contractually on the exchanges. So the option would be what could you purchase on EX or OMIP or NASDAQ, and can I get a better deal via a PPA? And when this is the case, we start to see a booming PPA market. So yes, there is economic reasoning behind PPAs. It's not just I want to be green, but I think we talked about the obstacles. It's a long-term nature, the credit side. So there are some obstacles on the way, and it's by far not a standard business. Even if you start to have contracts to start from, we normally see in the transaction where we are involved as Pbas that it's still a negotiation process, which is quite lengthy, because people will do it the first time normally if it's a corporate, and on the other side, the developers investors are also learning still on these contracts. But yes, I would say it's an economic reason behind, and we see PPA prices are linked to these wholesale price levels. I think especially good, you can see this in the Nordic market where you have a 10-year settlement price. We see now that as well the Spanish market moves to 10-year settlement prices. So there is a clear link to traded energy prices, as this is as well the benchmarks that is coming from utilities doing these PPAs as well. I think Uniper said they have done a gigawatt of deals in the last years. So this is an important pillar of the PPA market as well. So the corporates are kind of in competition to utilities when it comes to offtake. And I think they can offer a good pricing.
that's what I also kind of want to get to. Like, there's a lot of negotiation. These structures are complex. It's not a transparent market. Every price, every PPA is basically negotiated on an individual basis. Terms differ, the asset differs. So why go through with all of that, and why not just go to Anurag and sign your Uniper or your utility PPA? So is it like a pricing benefit, for example? Are you cutting out the middleman on the PPA? Where do we stand there? So I would expect that PPAs probably have a better pricing, but you take no risk. So
I would maybe Anu could share my view or see it different. I think there is a cost of a middleman, but there is also a service from the middleman. So if you are operationally set up to do this all on your own, you can potentially get a better deal. And we see corporate PPAs being signed at very interesting price levels. On the other hand, then you need to have the setup on the operational side, as Anwar described it, or you need to outsource this to utility or parts of this to utility. And I think this is something. If you have a lot of volume, you can go in this direction and maybe save some money, but of course you need a certain setup to do so.
So so I see already actually a couple of questions coming in. So at this point, let's take the opportunity to maybe already bring some questions in here. So there was one question. Maybe you can say something to that, Mercy. What is the ECA covered portion of financings based on a PPA, and how is it developing? So it's also a question probably also going in my direction.
Sorry, before that, I think that Anurag wanted to say something because I saw him like speaking, but we couldn't hear him. Anurag.
Yeah. Yes, Christian.
Now.
Sorry.
Can you hear? Sorry.
Yes.
Yeah.
Okay. Sorry about that technical issue. Before we go to the questions, perhaps I just wanted to add one line regarding Jens's comment. Certainly, I would state that utilities absolutely have a very important role to play in essentially enabling the offtake of renewable electricity by corporates. So I wouldn't rather see it as a middleman, rather a very key or a valuable stakeholder. Out of those cumulative 9.4 gigawatts of renewable assets that received the PPA and the stats, there's a certain important role that utilities such as Uniper have played in enabling them, and also being somebody who could help the rigidity of on the creditworthiness of an SPV versus the creditworthiness of a utility. Certainly, the rigid requirements that a bank would have is something that a utility offers in terms of being more flexible or innovative with corporate customers or corporate off-takers who are not that strong. While we do wait for EIB and other state bodies to release incentives, utilities are actively here to help out that gap, fill that gap on one end. And it goes without saying, on the operational side, most utilities have a full-fledged setup available 24/7 to address the needs of the corporate customers, while also having a portfolio approach. Essentially, as I had said, for example, the 1 gigawatt that we have off-taken, we try to develop a portfolio of this 1 gigawatt, where if one plant is unavailable or if the sun stops shining in southern Spain, maybe in eastern Spain there's another park that we could deliver from. However, you still know that your corporate offtake has been helpful in bringing this plant to the grid or online. And that's the value I think utilities do offer. And that's something our own company, Uniper, has adopted. And of late, we've been stressing the point that Uniper is here to empower the energy evolution or push forward the decarbonization agenda, essentially. And I would expect similar role for other utilities as well in the industry. Just a point to say. Thank you.
I mean, that's also what Jens, I think, mentioned in the beginning. There's a space for everyone, and this is a market. And also in this panel, we can see that everybody is working together towards more renewable energy, and everybody plays an important role. Absolutely. So thanks for that. Coming back to the question, so one question was the involvement of ECAs in financing. Then that they are probably also a very good opportunity to lower the risk profile of projects and maybe also go to more developing countries. And from a bank perspective, I can say certainly that's certainly true. ECAs definitely help to facilitate projects in more risky countries. And if the ECA also covers the full economics of the project, including the PPA, then of course it's a very, very valuable option to go into these countries. I can say how many PPAs currently are already involved and how many ECA covered PPAs are out there right now. So I can say your percentage. The most PPAs I see on the day-to-day business are right now without ECAs, but it's coming more and more. We see more and more projects involving ECA coverage. That's for sure. All right. So there's another question. What's the role of banks in this market? Just providing project financing, or do they offer more services for corporates looking for PPA opportunities? Yeah, that's a very good question. So I hope we as banks play a valuable role in these markets, and we certainly are offering project financings and bring these projects hopefully to a financial close. And I think a role of a bank, of course, is also to evaluate the offtake risk, and this also can help the sponsor to some extent to check his bankability on the structure he has in mind. So I think that's an important role on a bank on the financing basis. Other than that, looking at we also are there to talk to off-takers, to really talk through potential PPA structures, how these could be financed. But I'm more on the banking side. So I don't know, Jens, for example, how you see the role of banks in this market and on the PPA side.
I think currently we still see that most of the renewable and renewables is based on project financing. And therefore banks play an important role because they are the senior lenders to these projects and to some extent define certain criteria in the PPA. I think a bank wouldn't feel comfortable to finance if the duration of the PPA would just be 5 years, because simply the cash flow security would be quite low. And in the end, you would have the fully merchant risk in the project. And this would, give only a very low leverage if it's financeable at all. So by these levels where banks feel comfortable, they set certain requirements for the PPAs. So they have an important role in these markets. We saw before COVID that some banks got more aggressive in their lendings, got comfortable with shorter PPA terms. We saw even the first fully merchant lendings, so where no PPA was required in some countries. I think COVID shows that there is really a huge volatility in power prices, and this is not only going up. Therefore, I think we all need to get new comfort into price levels and these projects, but currently, therefore, banks play an important role, and they set the scene for PPAs.
And I think it's also important to notice that despite of COVID, the market goes ahead, the market continues. Yep. So that's also important to know that we have suffered like a big crash, and despite that, we are still seeing these type of deals being closed, meaning that of course there's huge benefits for corporates to engage in these type of deals, and well, we have seen certain ups and downs with the power prices, but despite of that, that continues and the market continues. So I think it's worth noting that we have just suffered like a small, say, crash. It's like something really unexpected, and that has harmed quite hardly some companies. But again, we see like a bright future ahead, and I think that it's worth having these type of conversations. That okay, despite of these upheavals, we see options and we see a bright future ahead, and it's worth talking about actually how to the options that we have to close these deals.
Yeah, I think I can give comfort to this. I think we saw less deals. We are monitoring as Pexapark the European PPA markets. We are making fair price evaluations all over Europe, and we try to catch every PPA deal in the market. And we saw a dip in April and beginning of May. But since June, we are back to February numbers in terms of number of deals we are seeing being closed. So yeah, I think it's picking up again, and it's getting even stronger. I think the COVID is a short-term crisis, but the climate change is an even bigger crisis, and yeah, I think we need a lot of investments in renewables in the next years, and PPAs is one good way to finance them.
Indeed.
So
it's
your
yeah.
Sorry, just to
No,
add
I just
one
wanted to
point, an
say
interesting insight. Sorry, Mr. Just to add one other interesting insight, the PPA transaction market has been quite strong. Essentially, as Jens rightly pointed out, it has recovered. But for the PPAs that have been concluded, the projects which are to deliver them have been facing some delays, what I have recently learned, because of a project development itself has taken a hit. Probably that was one reason why there was a dip in the earlier part of the year or the earlier part of the crisis. Now, the modules or the turbines which need to be shipped to a specific location, the logistical constraints have increased a bit. So the ease of doing business has certainly taken a hit. However, the itself is, I rightly say, is being strong at the moment.
Yeah, and that's also the feedback they have from our members when talking to them, that they indeed mention that they have suffered some delays because of the hurdles of building new plants, and also because the limited cross-country mobility for their employees. And because of that, indeed, has been some delays in building up these plants. But we'll see. Life continues.
And that's also a very important aspect that corporates need to consider. The project risks associated with a direct PPA that also you have to keep in mind if your supply is delayed by a few months or a few quarters than expected in the near term. Certainly, this is a near-term point, but it's worth considering as well.
That's also another good question that just came in. I find it a pretty straightforward question, and I want to throw it out there. So what are possible first steps for a corporate seeking to source renewable energy through PPAs? Who wants to go first?
First step, if I may, I think is just to inform yourself. So to see what's out there. To even just take Google and just, get knowledge about it. Just read and learn. And then just talk to advisors, to advisory firms that they really work on this topic. And little by little, just get confidence on it, because I know is that it's a very difficult decision. You have to talk to the CFO and convince him or her that they want to take this decision, and that's not an easy one. So you actually need very to back up information to go in front of that person and say how you can convince him or her.
And
I would agree. I think.
Jens.
Yeah, I would fully agree. I think it's a lot about information, because it's a complex thing still, PPA. So it's a lot of information included. Yeah, we do offer courses, PPA academies, where we go through these different contracts and maybe on a one day, not just 1 hour as we do today, and try to help sellers and buyers to understand this topic better. And I think once you have built up the education, you have to find the right stakeholders within your company. I think the CFO was mentioning, but there is accounting as well. Am I able to close a financial transaction, or is my CFO against such a transaction? Am I capable of doing the accounting treatment of such a transaction? All these questions needs to be answered. So usually it starts maybe on the procurement or social responsibility department, but it should involve a lot of different positions within a company, from the business to procurement to let's say the management, as well as the accounting, treasury needs to be involved in such a transaction.
And essentially, there's a very structured part to familiarizing yourself with green offtakes and PPAs. One of the best ways to advance it maybe at a more later stage would be to attend key conferences such as the Resource Conference itself, or the Intersolar, Wind Energy Hamburg, Husum, which have been quite known to bring many stakeholders to the table. Corporates such as the audience we have here, developers, utilities who also would like to share the value they offer, and it would be a high value add to find out firsthand as well.
Indeed. So for the resource event, that would be beginning of December. So that's a very good timing. Just 3 months ahead.
So I think we are almost running out of time. Let's see if we can bring in another question. So thanks for submitting questions. We received quite some questions, so we won't be able to cover all of those. Let's see if there is another one that we can bring in here. This question, which is maybe a little bit technical, but let's see if we can get there. Is the price selling risk for a supplier of PV and wind farms increasing due to the volatile production source? Prices going down due to traders' risk to sell the volatile supply again? Is this different for corporates as off-takers? So that's also touching the base of volatility of the resource as my price fluctuating. So how to offset risk, I would assume. So that's something. Is that something a corporate has to technically be able to handle, or how can you take these volatility in the price risk?
Yeah, so I could start, and maybe Uniper will jump in. I think it really depends on the PPA structure. If you transact on an as-produced basis, yes, you will purchase a profile that is shaped by the production itself, so by solar or wind. So you're not buying a baseload, you're buying a production profile which has a volatility and it's intermittent by nature. And the value of this profile is, depending on the market, below or above the baseload. In most markets, we still see that renewable profiles are already below the baseload because we have quite a lot of renewable energy already. For example, a wind profile in Germany is on average 16% at the moment below a baseload value. And this is subject to change in the future. If you build more renewables, yes, this cannibalization of the profile will happen, and it's an important pillar in understanding the pricing of a PPA. But then comes the question, who takes this risk? And there are now, depends on the structure you are transacting on. If you transact on an as-produced PPA, this risk is transferred to the corporate, and he has to price it into his quote or into the agreed prices. If you transact on a baseload PPA, and they are becoming more common, for example, in the Nordics, this risk stays with the project. So in the end, the project will require a higher price, but the project is taking the risk, and banks are comfortable with financing on baseload PPAs as well. So there are different possibilities who takes this risk, and it becomes the element of structuring the PPA that it's feasible for both the off-taker and the investor and the financing. And that's maybe why the negotiations of PPAs takes a while, because it needs to be sorted out who takes which risk and what is the right structure for the parties involved. And of course, here could as well Uniper come into play, or a utility come into play that is taking this this profile risk.
Absolutely, and in such a scenario, as you rightly said, Jens, you can have a lot of volatility when it comes to solar and wind profiles. And one way you could avoid this is to have a combination of complementing sources of electricity which are still renewable, and that's something a utility is quite used to doing, and essentially mixing and matching renewable sources to your demand profile in a way. And that's one way to avoid this utility risk. Another one, that's one way to avoid volatility risk. Another thing to consider is the location of the plants from which your electricity. Now, volatility is something that you have to notice, that you have a predicted form of production, you have a predicted shape of production that could deviate when you're actually producing it. And locations like northern Sweden and southern Spain are a lot less volatile compared to locations like Germany or Poland, where there's a lot more weather factors to consider. And certainly, I think the location from which you source your electricity also plays an additional role, just to add in there.
All right. So thanks for that. Admittedly, it's already 12:01. So I initially had planned like for 5 minutes of closing remarks, but I believe a discussion is always more valuable. So I will keep my closing remarks very short. Merce, Anurag, Jens, thanks a lot for joining us today on this panel. I think such discussions can be held on for another hour at least. So we will definitely do something like that again. And yeah, thanks again for joining us, and we hope this was a good event for the audience.
My pleasure, Christian.
Yeah, it was a pleasure. Thanks a lot for having us.